Hello everyone, and welcome to the latest installment of Things That Make You Want to Scream into the Void. Today we're diving headfirst into the swirling vortex of economic anxiety that is the Consumer Price Index, or as I like to call it, everyone's favorite monthly reminder that everything is getting more expensive. As you can see from these delightful charts, inflation is doing its best impression of a roller coaster that only goes up. But fear not, dear viewers, for we are here to dissect the latest data, explore its implications, and hopefully emerge from this economic haunted house with our sanity intact. Now, before you go rushing out to buy a solid gold yacht as a hedge against impending economic doom, let's take a closer look at the numbers. Inflation has actually cooled slightly, which in economic terms is like finding a slightly less moldy sandwich in your lunchbox. It's not great, but it's something. This slight deceleration could mean that the Federal Reserve's aggressive interest rate hikes are starting to bite. But it's too early to declare victory over the inflationary dragon just yet. Now let's talk about core inflation, which is basically inflation with the volatile bits like food and energy taken out. Think of it like a salad. It's the part of inflation that's supposed to be good for you, even if it doesn't always taste that great. And just like a salad, core inflation is stubbornly refusing to come down, which suggests that the underlying inflationary pressures in the economy are stickier than a toddler after a juice box. Now, you might be thinking, John or AA or whoever you are, this all sounds terrible. How is the market not imploding like a dying star? Well, here's the thing. The market actually responded positively to the latest CPI data. Why? Because even a slight slowdown in inflation suggests that the Fed might not have to keep hiking interest rates with the same gusto they've been displaying. But before we all start celebrating with champagne and caviar, which by the way, are also more expensive now, let's not forget about those pesky, sticky factors driving inflation. Shelter costs, which make up a significant chunk of the Consumer Price Index, are still rising, and gas prices, while down from their peak, are being as unpredictable as a cat in a room full of laser pointers. And speaking of energy, let's not forget that rising energy prices are like the unwelcome house guest who refuses to leave. They just keep adding fuel to the inflationary fire. So, while the overall inflation rate might be cooling slightly, the energy sector is still hot, hot, hot. Meanwhile, in the wonderful world of food, prices continue to rise, making grocery shopping feel like a competitive sport where the grand prize is not going bankrupt. From grains to dairy to that avocado you can no longer afford, food inflation is a real pain in the stomach and the wallet. But wait, there's more. Because it wouldn't be a proper economic update without a rundown of all the other indexes that are also going up. From used cars to medical care to clothing, it seems like everything is getting more expensive except for maybe our collective will to live. So, where does this leave us? Well, inflation is still a major headache, but there are glimmers of hope that the fever might be breaking. The Fed will likely continue to raise interest rates, albeit at a potentially slower pace, and the market will continue to react to every economic data point like a caffeine-fueled squirrel. In conclusion, the economic landscape is still a bit of a mess, but we're all in this together, trying to navigate the inflationary pressures and come out the other side with our finances intact. Remember, knowledge is power, and understanding the forces at play is the first step to making informed decisions. Stay informed, stay vigilant, and maybe consider investing in a really good stress ball.